M1 isn't noise. It's just you have to understand the bigger picture. So M1 is pretty easy to trade if you understand where price is going, but you need that higher time frame overhead to be able to operate on M1 a little better.
When you are building a narrative, let's say a playbook of an A+ setup for you, can you walk me through the steps? You come to your screen, and what are you looking for, and do you do a top-down analysis, or you write down to the lower time frame?
Top down is very, very important. Top down is essentially your compass. If you don't know where prices go in, it's easy to get lost on any little impulse going one way or another. Most people tend to chase what they call displacement, and then their profits end up being displaced. So for me, what I like to do is go to the daily time frame, look at where we are in the daily. Are we within a daily wick? Some people might refer to a rejection block. Are we in a daily fractal? Are we in a daily supply demand? Whatever it is, I look for that. Then I go into the 4 hour and look at what the 4 hour is doing. Is a 4 hour wicking? Has the 4 hour swept something? I might go into the 15 minute and see, have we had a closure above or below wherever it is that price is looking to go directionally? And then on the 1 minute, what I'm doing is trading in that direction of wherever I am in that daily time frame.
When you are connecting these time frames together, apart from where you are, let's say wick-wise or point of interest-wise, are you also factoring in market structure and trend?
So market structure is the crux of what I trade. I don't believe that you should do anything outside of market structure. Market structure lets you know the side of the market that price is more efficient on. It's not that you can't trade against the trend, but you just have to know where those particular points are, and you need to be a little more advanced in doing so. But if you, as they say, the trend is your friend. If you stay on the side of the trend, it's a lot easier to just get in and get out, take your money, and then go about your life.
When you are kind of doing a hypothesis of trend analysis, and it's kind of conflicting, where the daily might be bullish and the M15 bearish, and you don't have alignment in all the time frames, are you waiting for now M1 zones to come and then working your way up, or is it you wait for the daily zone first and then work your way down?
So I generally wait for something that's a little more in between.
Okay.
If I'm in a daily zone, I understand that price may need 2 4 hour candles, 3 1 hour candles in that daily zone in order to shift. We know it as a 3-bar pattern, right?
Okay, so basically you're not taking the first M1 break of structure in a daily zone.
No,
and hoping it replicates.
no. Some people try to get in on a 5-second zone and try to take it to an hourly POI, and I don't believe in that. You definitely have to wait for price to consolidate and then shift, but you need first a sweep, a manipulation, and then you trade in the direction that price is going in.
Beautiful. Just from the prep of the show with the team, I see that we are aligned in many ways, but probably some areas that maybe we can have a bit of a debate, which I look forward to. But I just want to kind of get a, as you said, compass on how you view everything. When something is not in a point of interest, let's say you do your daily analysis and price is in no man's land. You got your demand up there, you got your supply down, sorry, the other way around, demand down here, supply up here, and you know that it might take days to get to either one of them. Are you still considering the higher time frame if it's not in a pivotal moment?
Well, what we have to understand about the fractal nature of price is that we are always in a point of interest. It just depends on what time frame that point of interest is. So the point of interest that we currently are in, like you mentioned, it might be in no man's land. That might just be something that's pivotal in price to send it back as a retracement before it moves towards maybe the supply that's up above or the demand that's below. But we are always in a point of interest. It just depends on where it is on that time frame.